So let's move to another opportunity now, which we believe is the grid infrastructure or the power infrastructure that in the whole world needs to be changed if the whole grid is wanting to have more of renewables or this new energy industries. If you look at, our grids were manufactured many years ago and they've been put in place to only take care of the traditional power sources. If we are moving from, for example, a thermal to a solar, there are a lot of changes that the grid requires, and accordingly a lot of investments that need to be made, and that brings a lot of opportunities. Many a times people ask that what is the best thing that you need in capital markets, and most of the times our most focus is that where is there a large change in the technology or a large infrastructure change happening. Because whenever there is a huge change in the way of doing something, that is where when the world adapts, there's a huge scope for growing that business. And if you look at the basic difference between a thermal power plant feeding the grid and a solar power plant feeding the grid is that there'll be large scale changes in the size of the plants. If you look at thermal plants, the larger the plant, the more efficient they were, and hence the focus was to build large power plants at sites where there was more coal availability, and that was what the grids were made available, or the transformers were also made available to deal with that situation. So the basic difference between the traditional way of distributing power and the modern way of distributing power is that the traditional thermal power plants used to be these huge bulky plants, but there were fewer plants in the whole of the country, right? But currently you have more distributed power generations, hence the number of substations that are required to deal with the power collection are far higher, right? And that requires an infrastructure investment. So for example, traditionally, if India wanted to manufacture 100 gigawatts, there used to be these huge power plants of 10 to 25 gigawatts that will be created, and then those substations would take care of the needs of the power manufacturing, right? But now there can be smaller 1 to 5 gigawatts kind of projects which will be put up, and then the need of 100 gigawatts would be hence attained by these smaller projects, right? So if you look at more substations means you require more transformers to transmit that power. The size of the transformer would reduce because when you're dealing with these huge thermal power plants, they require higher MVA transformers. When you are dealing with solar or wind and smaller power plants, they require smaller transformers, and hence the category and also the quantity of transformers goes through a change.
अगर आप ये वीडियो देख रहे हो तो इसका मतलब ये है कि आप स्टॉक मार्केट ट्रेडिंग और इन्वेस्टिंग में इंटरेस्टेड हो। अगर आपको बहुत सारी ट्रेडिंग स्ट्रैटेजीज सच एज एल्गो ट्रेडिंग, फंडामेंटल एनालिसिस, टेक्निकल एनालिसिस के बारे में और जानना है, देन हेड ऑन टू upsurge.club, जहाँ पे हमने हर कैटेगरीज के बारे में कोर्सेज बनाए हैं.
The number of touch points, when the power collection touch point increases, then you need substations to be drawn, and that requires cabling, that requires conductors, that requires a lot of other infrastructure to be put up, right? So if you look at the basic thing, if someone could have identified that more smaller and larger number of transformers would be required. So if you look at, for example, in Indian context, the companies which are making small transformers, they have their niche and they're focusing on that, and then they are not making the larger transformers, right? And the companies that are making larger transformers, they're focusing on that business and they didn't venture into making smaller transformers, even though they might have the capability, but because of the expertise, that was how the market was structured, right? So there were small companies, right? Like a Voltam transformer or a Silchar, both have benefited dramatically because of their focus in small MVA transformers and supplying it to the private sector, where their collections also was very strong. So when there was a huge demand in the market, and hence they could do smaller capexes and increase their sale, and also cash flow profile increased dramatically, right? But similarly, these kind of opportunities were there in other spaces. If you look at a company like APAR, which was making these cables which went into this infrastructure, conductors which went into this infrastructure, and also transformer oils which went into this infrastructure. So it had 3 to 4 products and global dominance in a couple of them, right? So conductors APAR is world's largest manufacturers, in fact, right? Transformer oils, it is one of the largest manufacturers, and also the monomeric cables, it is one of the world's largest manufacturers. So in that context, if you look at, it had three products which could give it a very good edge in terms of increasing its sales and also improving its margins, and the company was available at a very small market cap with respect to the sales. I mean, you in the startup world where you have companies, going 5, 7, 10, 20x of sales, this company was actually available at just 2-3,000 crores market cap when its overall sales was around 9 to 10,000 crores. So when APAR kept on increasing its quarter-on-quarter performance, the funny part was that most of the analysts and investors thought that this is just a cyclical bump and the company would again come back down with a smaller margin, or maybe the sales would stagnate. But the management of APAR kept on telling that we are gaining market share in our conductors division and also in the cables division, and the exports of its cables and conductors were also going up dramatically. So that was proving a point that if a company is gaining market share and its dominance is increasing, it will bring efficiencies and also increase the margins. And it has happened again and again in many industries. And you just cannot ignore companies which are increasing their market share in any segment, because we've seen that classic case studies when Exide and Amara Raja both were dominating the battery market, but when for a brief period Exide stagnated and Amara took its advantage and increased its market share, the market cap of Amara Raja went up 10x, and in that period Exide remained where it was. The market cap didn't even go by 15-20%, even though the absolute earnings of Exide also increased. Its profitability also was higher in those 4 to 5 years, but the market completely ignored and was hooked on to Amara Raja for delivering more and kept on bidding it higher. So it doesn't mean that only profit growth and only sales growth can bring you market returns. You also need dominant franchisees which are increasing the market share, and if that happens, the kind of multiplier that you get on your investments is huge. So companies in their segments, when they're experiencing growth, and that growth is because of market share gains, that is the best place to be in, and market generally loves these kind of companies, right? So APAR, if you look at split of the revenues, if you look at, were having these divisions which were geared to the power infrastructure needs of the whole world and not just in India, and had high growth segments like the cables division, which had these specialized cables, which they were market leaders in the world for making these cables which were specific to the application of renewable energy, and they could withstand the temperature even in 50 or 55 degrees kind of environment. That is where the growth and the earnings upside of APAR is slated to surprise a lot of investment community. And if you look at the transformer oil business, where maybe it had just a cyclical bump, but when a company is growing its earnings, in the cyclical components also it gets a bump. The cash flows, if they are used to grow the high growth segment or the stable segment, that is where the capital allocation skill of a company also moves its business prospects forward. And that is what APAR is actually doing, where without increasing its debt, it is using the cash flow that it has internally generated to take forward the growth of these segments, which are in fact the future of a lot of needs of the modern power ecosystem. In fact, on the traditional power ecosystem side also, if you look at conductors, their usage would always go up if we need more touch points, if we need more, distributed power manufacturing to be connected to the grid. And also, if you look at globally, a lot of these products which have metals as a component, higher cost of the raw material is metals, that India is gaining an advantage, because in a lot of metals, India's manufacturing cost curve is now lower even to a China, and it is able to compete to any other country which is there in Asia, and most of these companies are there in Asia, right? So if you look at cable division also, a raw material cost that is dependent on the metals has also led to a lot of demand for these India made cables abroad. So if you look at APAR's journey or any other transformer company's journey, it has been defined by the growth in the infrastructure that is being experienced. And if you look at what is happening in the world, is if we are wanting to do electrification of most of the economy, that means we require more electricity generated. Electricity today is actually replacing oil, right? So if you look at most of the applications where we had these fossil fuel and crude oil kind of products, fulfilling the energy needs, we want to electrify it. So you need more investment in the electrification economy, and that is where all these ancillaries which in a power or a transformer company or a grid supplier would experience a growth, and that is a long growth that is slated to go for multiple years, because these investments would not stop in a year or two. These investments, which are slated to happen in most of the countries of the world, will take off at a faster rate when the economies over the world stabilize. Currently, since the past 2 years, 3 years, we had COVID, we had a US slowdown, we are talking about bank failures in US, we are talking about war that has happened in the between Russia and Ukraine. These kind of scenarios, though, were there, still you had opportunities, still you had companies which have grown, and in fact these war situations have actually given impetus to manufacturing a lot of these equipments or sourcing these equipments from India. Because for example, if a Russia was supplying few of the transformers, or Ukraine was supplying few of the transformers to the European nations, that has in fact gone out of the window, and those transformers are in fact being exported out of India, right? So that's a global demand that has also emerged for India-made goods, and that is helping companies like APAR. And as a case study, you should take it as a classic case to observe how the grid infrastructure investments would impact the profitability of few of these players and how you can benefit out of it. Thank you.